Welcome to Macro Hive Conversations with Bilal Hafiz. We aim to bring you the best in macro and markets thinking. To see our latest thoughts and analysis on the world, visit macrohive.com. We've had a super productive week at Macro Hive. We've featured pieces ranging from mapping the US V-shaped recovery to what could derail FANG or big tech stocks to important shifts in European capital flows. But our biggest treat is this week's podcast guest, Alfonso Prat-Gay. He was the governor of the Central Bank of Argentina from 2002 to 2004, and later he was Argentina's finance minister between 2015 and 2016. I actually had the pleasure of working under Alfonso during my J.P. Morgan days in the late 1990s, and I hold him up to be one of my most influential mentors. Before this podcast, I also asked our Macro Hive community for questions to ask him, so hopefully you'll hear me weave some of them into the conversation. And remember to become a subscriber if you're not, so that you can participate in these sorts of things. Oh, and look out for the scoop in this podcast where we end up talking about the Bank of England. So on to our conversation. Welcome, Alfonso. Great to have you on our podcast show.
My pleasure, Bilal. I'm looking forward to our conversation. I'm surely going to learn a lot.
I guess so much has happened in the world since COVID. And I think one of the things I've struggled with, or many of us struggle with, is it's easy to fall into the trap of COVID essentially creating a blank slate as if nothing happened before COVID and we just look at the world from COVID onwards. But obviously there were lots of trends in the world before COVID. So for you, back in say December or November, December last year, what for you were some of the challenges facing the global economy and then say emerging markets and perhaps like Latin America?
Okay, quite a few points actually. And I like we start by this because as you say, COVID ends up being responsible for pretty much everything that's wrong in the world. And we tend to forget that there was a pre-COVID world under which some things were going and some undercurrents were developing. I think, first of all, I would argue that the US macroeconomic environment or the macroeconomic policy mix was completely out of whack. It was quite obvious that under a full employment economy, the fiscal policy was absurdly loose. And you could even argue that monetary policy was also quite loose, whether because of political reasons or because of credit concerns or whatever it was. Essentially, the two levers of economic policy were pushing in one would have recommended the opposite way. The US was clearly in that direction, and it is more so right now. China was also going through its own challenges, switching from external driven growth to domestically driven growth, and therefore paying the cost of a smaller growth rate and creating some tensions in their own shadow banking system and the formal banking system as well. I think most people were looking at this. In fact, there was a very good paper by the Fed around December of last year looking into what could happen to the rest of the world if China had to slow down very dramatically. The irony was that, in fact, it did, although for other reasons. But that paper was kind of analyzing and pondering global implications of something that most people were looking at, whether this calibration of growth in China was going to be economically, socially, and politically sustainable. I think Europe also had their own issues. There always are, and they are structural, and they have a lot to do with the design of the monetary union, and in fact, what's been left out so far in that monetary union. I think there were some pockets of animal spirits in the credit markets, particularly high yield in the US, and to a lesser extent, some emerging markets. And I think the way of looking at Latin America is largely the following. Latin America was suffering the end of the commodity cycle that gave so many good returns to most of the economies and most of the politicians around that time, from, let's say, the early 2000s to 2015. That had come to an end when the tide pulled back. It was quite easy to see who was bathing naked, and were more than what you would have expected. Growth slowed quite dramatically. And then we had the second hit. I mean, the first hit was the end of the commodity cycle. The second was regional widespread discontent and social tensions that flourished even the most unexpected places like Chile. To me, that was a very clear marker that some of the underperformance of the previous years was having a significant impact on the social structure of most of our countries and economies and societies. That was stopped basically by lockdowns. I mean, people are not allowed to go to the groceries, therefore they're less allowed to gather and to protest against the government. But that trend has not actually gone away. In fact, like some of the other issues that I've mentioned already, I think if anything, COVID will actually reinforce these trends when the lockdowns are over, because we're seeing, in particular, for instance, in Latin America, if you look closely at the numbers, it's been a horrible first quarter for most of the countries. Even if the lockdown started only towards the end of March in some places and even later than that in some other places. I've seen some numbers out there. I don't pay too much attention to the World Economic Outlook. I think the guys were very pressed to come up with something. Bilal, you and I know what it is, the pressure of the deadlines, and to come up with a forecast. I think once they think it through, they're going to revise those numbers quite dramatically down. I think you could safely say that the region is geared towards a 8.5% or 8% drop in economic activity this year. Just to give you a sense, during the 80s, the lost decade of Latin America, the worst year around that decade was 2.5% for Latin America as a region. So we're talking that COVID is 3, even 4 times as bad as what we had in around the 80s, or around the tequila crisis, or even the crisis in Brazil in 1999. And this comes on the back of a very lousy trend. Latin America has now been more than 25 years on average growing at a lesser speed than Africa. And of course, over the last 5 years or so, even growing less than the developed, mature world, which doesn't make any sense because there's a massive catch-up that we need to go through, and that is actually not happening. So on the back of these undercurrents, we got the COVID thing. But I would point out to those that I mentioned, policy mix in the US, the rebalancing in China, what's wrong and what's right with Union in Europe, the many differences across Latin America and also across emerging markets. But I think those 4 are elements that we need to take into account because, as I said before, if anything, they will eventually end up being reinforced by COVID once the lockdowns are over.
Well, you mentioned the incredibly weak growth that Latin America has had over the past 10, 15 years or so. I didn't quite appreciate how weak it has been relative to other emerging market regions. I mean, what do you think some of the factors are behind that? Obviously, there was the lost decade, then there was a whole sort of deregulation phase. What kind of happened over the last 10 to 15 years for it to be such a poor performance?
I think from a structural point of view, I can point to 3 driving factors. One is Latin America's infrastructure. Anywhere you want to look at institutionally, but also in terms of, the capital accumulation is very, very poor. There are also, of course, some exceptions, but in general, one can say that it's very hard for Latin America to compete against the rest of the world with such poor infrastructure. I mean, roads, harbors, financial infrastructure, and local markets, other ways of connectivities. That's one factor that's quite an obvious one, and that's been, if anything, sliding down in the wrong direction rather than picking up over the last few years. Secondly, I would argue more about human capital, not just physical capital, but human capital, education across the region. I can speak, for instance, in the name of my country. Argentina used to be the shining gem with regards to education for the best part of the last century. But that has deteriorated significantly, and not just Argentina, but the region as a whole. That creates, of course, massive scarcity of human capital. It creates immense problems of income distribution, and it creates also some political tensions that end up politicians are more pushed towards the short run and can never raise their heads to beyond that into the future. I think there's another ongoing trend, which is a demographic trend. Our population is aging much more rapidly than, say, Africa's or emerging Asia. And this is creating some tensions with the pension systems. Most of the fiscal problems that we've got are, to a larger extent, pension problems more than anything else. And therefore, the scarcity of the resources that are left to deal with the other elements of the equation that I've just mentioned. The outcome, if you will, looking at productivity over the last 15 years or so, whatever growth that has been in the region, it's been basically through more labor and very little through more productivity. In fact, these are numbers from a McKinsey report from a few years ago. If you take a period from the year 2000 to 2015, the region's total factor productivity run at around 0.6% per annum. That compares to more than 6% for Southeast Asia, 1.8% in Africa, and actually 0.9% in the developed world. So there's no way we're going to catch up if we can't quite be more productive on the margin than the guys we are supposed to catch up with, if you see what I mean.
With this sort of backdrop, so you had these longer term structural forces and then some of these global factors that we talked about. We then had COVID that's hit the world. What's your take in terms of the policy response to COVID, whether that's the economic policy response or the actual response from a health perspective, the lockdowns and so on? Obviously, there's been a varied response from countries on all these dimensions around the world. How do you slice and dice the world along those lines?
Okay, of course, there are two very different camps on the sanitary side of the response. Quite obviously, both Mexico and Brazil underplayed the risk or the danger of COVID, and therefore they were latecomers to the infamous lockdown world. They were some other extremes. I think Argentina is on the opposite end of Brazil and Mexico. It's quite obvious that in the case of Argentina, the lockdown has paid off in the sense that the curves are, particularly the death curve, is not moving up. Chile was somewhere in between those two extremes, which was odd because I would have argued that Chile had the resources or that Chile could afford a strict lockdown, which is the other part of your question. I started off with a sanitary element, and then the issue is whether, regardless of what type of lockdown you'd like to have, the question is whether you can actually afford it from an economic, social, and political point of view. And there, you look around, for instance, there are countries like Paraguay and Peru. They've been very aggressive, both on the fiscal and on the monetary side, and rightly so, because they had the resources to do it, and they didn't risk a credibility issue while doing it. We saw Peru issuing decently tenured Eurobonds a couple of weeks ago at very low rates, and Paraguay in a similar vein. You could have argued that Mexico could have done a lot more on the policy front. AMLO's done very, very little on the fiscal side. It's probably the smallest fiscal package that you can see in the region.
It's a bit surprising, to be honest.
It is surprising. It does speak about AMLO. There's so much being said about him, but I think to a large extent there's one area where he's quite transparent, and that area is fiscal discipline and even austerity, even in the midst of this trouble. I think there's some contagion in Banxico, in the Central Bank of Mexico, because yes, they cut rates, but not nearly as aggressively as some other central banks in the region have done, like Chile and Peru, who are, they're already hitting the lower bound. But even Brazil, you probably wouldn't have expected Brazil to cut as aggressively as they did. And then, of course, there's Argentina. Argentina has all sorts of issues, comorbidities, if you will, prior to the actual disease. And therefore, I've got a view that Argentina is trying to impose upon a society, a Latin society like ours, a very European type of lockdown. And that is creating significant problems. And we are, unsurprisingly, already seeing it in the data. And it's been going on for 60 days now. We use more than lockdown. We use, in Spanish, we use the term more quarantine, like cuarentena. And of course, quarantine comes from 40 days. So it's already 1.5 lockdowns, if you will, in that way. And it's quite obvious that there is lockdown fatigue. One thing I'd like to mention, because we haven't actually mentioned it, is that lockdowns are tremendously regressive from the point of view of income distribution. I don't see this discussion going on much in the developed world, nor in the developing world. But it's quite obvious. I mean, when you think about it, in our countries, the informal labor market is probably 30, 40, in some cases 50%. Most of these guys are basically running on a daily budget. If I work, I eat. If I don't, I starve. So it's kind of a luxury to impose upon those workers a lockdown. You're forcing them into picking between risking getting the disease, which they might not care too much in any case, or suffering hunger. It's a massive trade-off for most of our populations. There's also the issue that in many cities in Latin America, you've got the shanty towns, the poor neighborhoods, where families of probably 15 people share one same room, and you've got probably all 3 or even 4 generations in one room, which is the exact opposite of what the doctor ordered, because by locking them down, you might actually be increasing the chances of fatality rates of the elderly in that particular family. And then there's the obvious thing, there's more discussion about this in the developed world, of working from home, whether this is also not cutting through inequalities, pre-existing inequalities in our societies. I can tell you, I see it firsthand at home. I've got lots of children at home, either in school age or university age. They go to private universities and private schools. They're working all day long in front of the computers, Zoom and whatnot. But I also know very well about the sons and daughters of people who don't have the luxury of having a formal employment and do some work from home. And you can see that that digital divide will have consequences going forward. The same is true about working or not working from home. I mean, we can actually do this, you and I, not too differently from the way we would have done it without COVID. Most of our co-nationals in the developing world don't have that luxury. So it's tremendously regressive in that regard. And also from a national policy point of view, because, of course, Europe, the US, the UK, I mean, they can afford these massive fiscal and monetary packages, which most of our regions cannot. There's a lot of discussion about this, but one metric that we've been putting together, being pickier probably than the rest of analysts, in terms of actual compensation packages, comparing different areas of the world. Again, Latin America comes at the bottom here. I mean, when you go through the nitty-gritty detail of the fiscal firepower that they've been able to put together, it's not much more than 1% of GDP. And that compares to areas where the numbers have been, double digits. So that's also something to bear in mind. And it's also something that politicians and policymakers should put into the fray when they make decisions and they decide whether to go on with the lockdowns and so forth.
On the income inequality, I mean, obviously that was widening before COVID. And as you say, it could well be exacerbated by COVID, going forward. I mean, some of the widening inequality seems to be one is that it's a global phenomena. So there's certain global factors that are driving this. So, it's hard for an emerging market country to fight against that. But obviously there are divergences within the overall sort of trend. I mean, how do you try to dissect the trend in inequality? And then the next step after that is, from a policy perspective, what do you think is the best way of addressing inequality?
Well, I think, from a policy perspective, one obvious area, sound macroeconomic policies is as a necessary condition. The reason why I mentioned this, it's not that obvious when it comes to actually rolling up your sleeves and going for it. But when you look at it with some perspective, it does turn obvious in the sense that most of the regression in our income distributions across the region can be very easily traced and associated and correlated with the number of crises that our societies have had to live through. So essentially, a crisis in itself is very regressive because the guys who have the resources, will let some go, probably. In some cases, it's actually the other way around. But it's the base of the pyramid that is entirely at the expense of these watersheds of financial crisis that have hit the region again and again. So after each crisis, what we find out is that the poverty levels and that the income distribution is actually worse than before we got into it. I mean, the necessary condition is sound macroeconomic policies such that you don't even have to get close to such crises again. And then I think your social programs have to be, I'm a fan of universal income. I think there's a lot that can be do cash transfers under some conditions, of course, conditions of taking your kids to school, engaging in a training program, blah, blah, blah. It's not money for nothing, but I think it's a starting point to reorganize some of the elements of our populations that have been for so long under so much stress. I mean, the problem that we see in Latin America and also to some extent in Africa as well is that today's poor are the sons and daughters of yesterday's poor, and they're even the grandchildren of the day before yesterday's poor. So it's so entrenched that you need to shake the tree with very aggressive policies in that regard. Now, the question mark there is, you can come up with a very nice design, you can speak the right way, you can communicate, you can have the right idea, but the execution aspect of this is a massive challenge. And this is where I go back to some of the institutional elements. Some of our administrations are not ready to deliver on that particular department. And not to mention the experiences that we've had again and again with corruption, even in this incredibly sensible social department as inequality policies. So basically, everything is tied up at the end. The way the judiciary works, the institutional framework, the level of democracy, transparency, the media, independence of the media, and so forth. But basically, when you look at it from an economic angle, is sound macroeconomics, well-designed social programs that are basically geared towards universal income and cash transfers, a lot of investment in education, and also, of course, infrastructure in the poor areas.
One question then, I mean, you obviously have direct experience of being in a policy position. So you were governor of the Central Bank of Argentina back in 2002 to 2004. And that was just after the big devaluation, Argentina's default and moving off the currency board. And then later you became finance minister around 2015 to 2016. So you've had two of the top economics roles within Argentina. So you've kind of intersected with the machine, so to speak. And so from those experiences, what did you learn? Because from what you've described, it all kind of makes sense. It's all very logical, it's reasonable. But when you enter the system, what happens? What's the impediments? What did you find?
I mean, there are lots of impediments once you cross a line, basically. I would add to my background, I only do it because it's very important around this question. I was part of the opposition of the May days of Kirchner administration, and that was a humbling experience in so many regards. And that gave me a much better sense of the challenges and of the obstacles that you find. I mean, when I was governor of the central bank, of course, I had a peek into the political system, but back then the central bank was independent. I had a very clear idea of what needed to be done. Oddly enough, I had more of a headache with the International Monetary Fund because they never understand. They always think that one size fits all, and they've proven wrong, in my opinion, elsewhere, but they claim that they've proven right because it's worked elsewhere. It's going to work in your neck of the woods, and it's just not that way.
It seems like that's a rites of passage for all emerging market policy people to have a fight with the IMF.
Absolutely. I'll tell you a little anecdote about my fight with the IMF in those days. When I took office at the central bank in 2002, my predecessor had already signed off on a monetary program with a fund. The country had been going on for more than a year without a program, which was a big problem because the checks were going the other way around. Without a program, we were not getting any transfers from the fund, but we were paying off old programs. So we had an urge to strike a deal, and apparently this urge was the driving force to my predecessor because he signed off on in my opinion, a crazy monetary program, which was your typical IMF program. Cut your monetary base 25%, brush aside a few banks if you can, because they're all insolvent, and then magically everything will flourish afterwards.
Yeah.
So when I came into office, the guys were very excited. I mean, he's got a J.P. Morgan pass. He obviously speaks our language. This will take no time. We can count already on his signature. And it was actually the other way around. I made my case. I remember back then I used Japan as an example, which was a bit outfetched. But my point was that was a time when Japan was printing money, and yet inflation was not going anywhere, if you remember. And that was my discussion with the fund. They probably thought I was completely nuts. We were not going anywhere, and this is where the anecdote comes into play. After meetings and meetings and meetings, I realized that most of the actually, every single guy in that mission, including the ladies, were football fans. So I thought, well, this is a common thread here, a common factor. Can we make something out of it? So as you know, I'm a good fan of Boca Juniors, which is by far the best football team in the world. And
in Argentina, perhaps.
And the world as well. And so I decided I might as well take the IMF mission to the Bombonera, the Boca Juniors Stadium, which was quite a risky decision in itself. So I called up the president, the chairman of Boca Juniors back then, who was Mauricio Macri. And I tell Mauricio, I've got this problem. I need your help. I need a very good area in the Bombonera where I can bring these guys over. Security was a massive issue. If the hooligans of Boca Juniors would have known that we were bringing the actual IMF mission into the stadium, it would have been a mess. But the game was very lousy. But the guys were so excited about everything that they saw. You had two Englishmen, an Italian and a Colombian, and all four of them said that they had never seen anything like that, which speaks to my original argument. But in any case, after that, the relationship turned around dramatically in a magic way. We kind of struck a different chord. We started having a dialogue, and essentially they said, okay, we'll let you run this experiment. And in 3 months' time, if you're right, we'll let you go. If you're wrong, we'll go back to our program. And in fact, luckily enough, we were right. We ended up expanding the monetary base more than 30% in that year, in 2003. And yet inflation fell from, listen to this, 40% in 2002 to 3.7% in 2003. And yet we had the exact opposite experience last year with an IMF mission who told the Argentine government back then that the only recipe around is to stop printing money. And if you stop printing money, you'll get rid of inflation. And oddly enough, the Macri government did it. And yet inflation went up, not down. So that's so much I have to say about the fund. But anyway, your question was about, when I was governor of the central bank, I, of course, had a preview of politics and how politics get in the way of the sensible long-run ideas. It was much, much more clearer to me when I became member of Congress. I mean, Congress is like your best survey of who we are. Everyone was voted in by quite a few thousand people, so they've got a reason to be there. And essentially, it's a big body. We've got 252, I think, deputies. And this is where I learned how difficult it was for Argentina to move forward, because it's so difficult to strike a deal, to reach an agreement around long-run policies and so forth. And I think this is the case for most of our region. I mean, you look at Brazil right now, for instance. Much can be said about Bolsonaro. But the thing that worries me so much about Brazil with Bolsonaro is that there's pretty much no other alternative, because the political system is so atomized. So parties come and go. I mean, you get voted in by one party, you switch to another. So there's no political cement to any policy decision that you can take. And this is what makes Latin America policy decision not only so difficult, but also so transitory, if you will, and so unsustainable in the long run. You've got governments who come in and privatize. Next thing, another government comes in and they go back by nationalizing whatever had been privatized before. And you wonder, okay, it's left and right. No, it's exactly the same party, only that now they've got different guys and it's different incentives to do it. So yeah, I mean, policy making is difficult everywhere in the world, but it's probably more difficult when institutions are so weak and when the fight around resources brings you so close to the very short run.
Do you think part of this is a commodity curse? I mean, this is one of the questions I got from some of our audience to ask you. A lot of LATAM countries that have, various commodities, and to some extent that allows you to benefit from these super cycles. And as you said at the beginning of the podcast, when the tide comes in, suddenly you realize who had the bathing clothes on or not. But do you think that aggravates things, or is this too simplistic?
I think it does. I think the best example of that is Venezuela. Not only do they depend on one commodity, but it's a one good economy. Of course, that's the most extreme case. But essentially, yeah, the Dutch disease and the other way around of being a commodity exporter pushes you into these swings, and it makes life more difficult when it comes to structural reforms, because when you're flooding with additional resources, you want to just enjoy it. And politicians, and we're in the midst of the crisis, sometimes you've got the opportunity, but it's more costly than otherwise to do the right thing. I also think, this will sound really somber, but I think you can trace it back to the days of the Spanish conquest, because if you look back, it's so amazing that just a few Spaniards with no education whatsoever, with 3 or 4 horses, were able to conquer big empires like the Inca Empire and the Aztec Empire. The Incas, in particular in South America, were in many areas more advanced than Europe back then, and particularly in astronomy, mathematics, and so forth. And yet these guys succeeded in conquering a massive empire of more than 10 million people back then that went from Venezuela all the way down to Argentina. And when you read the chronicles of that time, one of the main reasons is when they came to our shores, the Spaniards were so lucky that the Incas were divided at that time. There were two heirs to the throne, actually three of them, who were fighting against each other. And of course, that created a wedge under which the Spaniards could get in. Likewise, the Spaniards were this close to actually losing South America because of infighting as well. Cortés was fighting against the other guy who the name now escapes to me, and they started fighting against each other. And then one Inca heir showed up again, and he was this close to actually regaining the whole thing. I might be pushing it a little bit, but what I'm saying is that it's probably in our genes to have these internal fights, unlike many other places in the world. Until we sort this one out, and I think about Argentina, I think about Chile right now, who's in the middle of something very, very unexpected to them, but they need to sail through, change the constitution and so forth.
Actually, on Chile, I mean, Chile's kind of the poster child of Latin America in terms of all the development statistics and, GDP per capita, institutional quality, and so on. I mean, how did they end up where they are now in terms of social unrest?
First of all, I think it was a big surprise. I'm not going to claim that I saw that one coming. However, I can claim that for many years now, I've been pointing to the fact that the market structure that Chile's policymakers had embraced was not necessarily the best possible system going forward. And I think there was the last straw that broke camel back was the stupid thing of the subway fare. That thing increased like 20 cents to the dollar, and that was the end of the world. Of course, there was something going on for longer. And that something going on for longer was the sense that most Chileans were being left out, that it was, to a large extent, although it was a well-functioning democracy, it was a very hierarchic system of government, not just in the public sector, but also in the private sector. I hate to make this point, but I'm afraid it's actually true. I mean, you come up with 15 family names, and you're done with probably every single sensitive power post in Chile, either in the private sector or in the public sector. There were massive issues with public services. I think when they privatized, they didn't come up with the additional and very needed element of a good regulatory framework. So the pensions were not there when the Chileans started to need them. The social services, there was a sense that they were not getting and they were not reaching out to everyone that needed them. And in particular, two things that were very important. Health services, they're mostly private in Chile and they're very concentrated. And education. Education is not just private, it's also public. But the issue with education was that students getting their student loans were not getting their opportunities when going into the labor market, and therefore they ended up themselves with a massive debt and with significant problems going forward. So I think under the surface, there were many structural inequality imbalances that were running for a while. Eventually, the shit hit the fan.
When I think about this, I kind of think about East Asia. So people, always use the East Asian model of how you develop. You build up a strong manufacturing sector. That's the most productive sector in terms of productivity. Then you pull the whole country up, and then you can start to transition to becoming more service sector driven. And Korea, Taiwan, Japan, all of these countries have done that. Now, the question, today is that it seems like it's much harder to follow that development model now, this kind of export-led manufacturing model. And Danny Roderick's written a lot about this. And so that kind of leads to this challenge now where if you can't go through the manufacturing routes, you then need to almost go through a much more longer term route where you have to build up human capital and you just need to just raise your quality of institutions, but also just general education levels to help you in the service economy and the broader parts of the economy, which takes much, much longer than the manufacturing side. And also in the context of deglobalization, that also doesn't help the manufacturing sort of path. So in that kind of context, is there any real path for these countries, like LATAM countries, to have these big productivity booms or not?
My first reaction to your question is that this is not new. It's been going on for a while. The literature calls it the middle income trap. Countries that get to a point where they are neither here nor there because they're about to get the quantum leap into the developed club, but they can't quite get there. I think probably the only exception to this trap, or the only successful example of jumping over the trap, is South Korea. I can't think of any other country in the world I mean, not even the other Southeast Asian countries are doing really well. Singapore is a case in point. I don't know enough about it. It's also, more a city than a country. But I think we're, to a large extent, this has been the trouble with center and the periphery for many, many, many years. And I think until we rearrange the global economic infrastructure, that will continue to be the case. And I think COVID might actually allow us to reflect upon this, because I don't think that in any other moment in history has it become true that the developed world cannot quite go along by themselves. We're going through a truly global pandemic. So you could choose the path of turning your back on the rest of the world, closing your frontiers and so forth, and do your own little thing. It's not going to work until COVID is out of the face of the earth. It's still out there, and it can come back to haunt you until you've got the vaccine. So to me, this creates a beautiful opportunity for developed countries to help themselves by helping the other countries in the world. Unfortunately, we haven't seen much of that. We are also in an era of very little, if any, multilateralism. I think Trump has basically bombarded all the bridges towards multilateralism, and therefore the international financial institutions should be doing much, much more to help out in this particular dimension, and they're not. I think the only way out for our countries is leapfrogging. It's quite an obvious point that I'm making here, but it's leapfrogging. It's probably no longer, it hasn't been for a while, manufacturing. It's very difficult to compete with China, for instance. It's hopeless to think about a service-driven economy if you don't have the right infrastructure, as I mentioned before. But one thing about our economies is that there's a lot of talent, sometimes wasted, but there's a lot of talent and there's a lot of creativity. And when you look at some of the best-known unicorns right now in the world come from Latin America. And oddly enough, quite a few of them from Argentina. I mean, one very interesting example is Mercado Libre in Argentina is like Amazon. They're not only in Argentina, but they're also in Brazil, in Mexico, in Peru. The market cap now is 40 billion US. So their market cap is more than the rest of the market taken all together. Of the Argentinian market, granted, it's a small market, but it's worth more than the oil national company, the airline, whatever. Here's an example of a leapfrog experience within the boundaries of Argentina, with the judicial system, with the institutions and so forth. So I think that should be the strategy going forward. I mean, of course, you can't quite forget that you're a commodity producer, and you can't quite forget that the only way out is through exporting to the rest of the world. But that also has some limitations. When the rest of the world is stuck, as it is right now, is very difficult. I mean, I think about Argentina in 2002. Why were we so optimistic about the way out for Argentina? Because we had a very competitive exchange rate, and the world was eager to buy whatever we could offer to the world. And now it's very hard to find someone who's eager to buy anything. Okay. And the other thing, which is also true of some of our countries and some other countries in Africa, and to a lesser extent a couple of countries in Asia, is that it's quite of a challenge when you export what you eat, because that means that from a social point of view, you'd rather need a strong currency, therefore cheap foodstuff, cheap goods for your population. However, from a development point of view, you need a cheap currency that makes you a good exporter, but a cheap currency, again, taints the income distribution against the poor. So I think you need to find the diagonal, and I think, probably the only alternative that we got is leapfrogging into the economy of communications and knowledge and so forth, artificial intelligence and whatnot. I mean, it's a very long shot, but we've got some examples that have worked so far.
Yeah, I was going to ask you about how you thought the IMF was doing, and maybe even the World Bank, but say the IMF is probably the more appropriate institution during the crisis period, at least during COVID. How would you score them?
I'm close to nil, actually, because I don't see them. Yeah, I don't see them doing much, really. I mean, of course, they came up with this debt alleviation to poor countries, which was a good idea, particularly if they didn't have to put much money into it, because it was someone else who was paying for the alleviation bill. They've been quite active in lending money under traditional programs to quite a few countries, but this is not a time for traditional tools. I mean, this is a completely odd time, and it's one area where, as I mentioned before, global coordination is of the essence. No one can be peaceful enough laying down at their courtyard in, I don't know, Chicago, thinking the disease is over, if people are still dying by cohorts in South America, Africa, or wherever it is. So I think the IMF and also the World Bank, but let's start with the IMF. The IMF's got at least 1 trillion worth of resources to deploy, and they're deploying them under the old framework and with very little doses going forward. I think they need to do a lot more. Of course, to be fair, it's the US administration that is putting the brakes there, but I think the rest of the world should cry wolf and get involved. I had my own proposition that, of course, didn't fly, but what I proposed was for the fund to set up an SPV, a special purpose vehicle, the amount of which would be equal to sovereign and corporate dollar-denominated debt maturities for emerging markets until the end of 2021. With the exception of China. I mean, I hesitate to bring China into the emerging market world if they are competing against the US for leadership, world leadership. So, and that would have cost, if anything, but the total amount of that would have been 300 billion, say 1/3 of the spare capacity of the fund. And if you had done that, and you could have done it, you still can do it, but you could do it through an individual escrow account for each country, put the money in that escrow account. It is for the authorities of that country to decide whether they want to use it or not, and whether they want to bail out transitorily at least the private sector that has some maturities coming due. But essentially, that would be in one shot, you would have taken care of the weakest link of the chain. And at the end game, probably with no cost whatsoever. Look at what the Fed is doing at home. It's amazing. We've never ever seen anything like that. I mean, the Fed is bailing mom and pop shops, small companies, commercial paper, whatnot. And yet the US is not willing to risk something not even closely along those lines for the rest of the world. It just doesn't make any sense to me. It doesn't. Some people in other international bodies, and they say, yeah, I mean, this idea makes a lot of sense, but there's no political, muscle for the authorities to do it, which is very frustrating, isn't it?
In Latin America, who's kind of the leading voice in the international stage, would you say?
No, we've got none. I mean, very good question. And I wish I had mentioned this before when we were talking about the issues and the challenges for Latin America. It's almost as if you need an FDR for the region. Abraham Lincoln, of course, we don't have those guys. You can't quite clone those guys anymore. But you look around and there's no leadership whatsoever. Even before COVID, every single president was too tied up with their own little things. You look across the region, for instance, Mercosur is not working. It never really worked much, but now Argentina is trying to set it apart again. Of course, there's the element of the Andean countries with the Pacific Alliance and so forth. But then Trump couldn't possibly care less about that. So there's no leadership. I mean, obviously, you point out to Brazil. I think Brazil should be the one. Mexico is big enough, but it's too close to the US. It's a different animal, if you will. And I think, we're all suffering from the fact that we don't have the right leader in Brazil. But as I mentioned before, I'm not sure that we could even have a leader at all, given how fragmented the political system in Brazil is.
Now, I wanted to ask some questions from the Macro Hive community. I kind of reached out and I was inundated with questions to ask you. So I'm going to just select a few of them. Now, this question was from Singapore. Which emerging market countries do you think will be able to successfully conduct QE and why? So obviously QE historically has been the domain of developed countries, but now we're starting to see emerging market countries starting to engage in QE.
I think that's one salient feature of the crisis management in this particular episode. Unlike any other, we see more and more emerging market central banks pushing to the limit, going to the lower bound, putting together some facilities. We've seen it in Thailand, we've seen it in South Korea. I don't want to miss out with anyone, but I think we've seen it more than anyone would have expected. And so far it's working. I think countries with well-entrenched reputation of their monetary institutions will be surprised at how much they can do compared to their history and even compared to the developed world. I saw Turkey was cutting rates today. I mean, Turkey of all countries, and nothing's happening. And this is a very different situation than in any other emerging market crisis where on top of all the curses that the countries were going through, you had central banks actually increasing rates to support their currencies. So I think you would be surprised at how many more emerging market countries that you would have expected will be able to afford running QEs. I think the question thereafter will be how quickly will they have to normalize their own excess money situation to the extent that there is. I mean, I mentioned this because most of us have thought for a while that this is something that, for instance, the Fed should have done at some point after the global financial crisis. And they didn't, and nothing really happened. And now they're doubling up. So I think there's a lot of thinking to be made about monetary institutions, about monetary policy, about non-traditional monetary policy, and in fact about the demand for money, which is the animal that one needs to nail to answer these questions. I think that things have changed quite dramatically. I think that with digital currencies, with the financial system functioning at different levels, I think there's an opportunity for emerging markets to do some of the things that other central bankers can afford doing. I don't think, however, that is also true when it comes to the fiscal lever. I think there are budget constraints that are very different in that regard.
You mentioned digital currencies there, and actually we did get a question about how central banks or countries are going to respond to the rise of digital currencies. So we have cryptocurrencies on the one hand. There's one whole debate around should countries accept cryptocurrencies or not. And then the other side is whether central banks themselves issue digital currencies, the so-called CBDC. Do you have, any views on that?
I have a few and far between views about it. I mean, it's a fascinating topic, of course. I find it very hard to get too excited about digital currencies, Bitcoin and others. I think there are still many, many problems with them. And the way I see digital currencies, I see them more as a competition to the traditional banking system than to central banks. And I don't see them as much as a currency in itself. I see them, if anything, as an asset class. And in such, I see that asset class as a potentially very efficient vehicle to ship money around, which is not the business of central banks. It's rather the business of one particular niche of the global banking system. So with that in mind, I don't actually see why central banks should not engage in making their own currencies have some digital capabilities. I don't see why. And I think they will end up doing it. Of course, the Bank of England is ahead of the curve in that one. There are some other examples. But I think the purpose is completely different here. It's not the purpose of the crypto nuts who think authorities should disappear and therefore I'll offer you this thing that is authority-less, if you will, but rather as a good state agency that looks into the well-being of their citizens. Here's another incarnation of my currency that could make your life easier. I think that's the way I would look at it, basically. And also, if you come to think about it, when you look at COVID right now, and some of the problems that I've seen in Latin America with governments, and also in the US as well, from signing checks that get or don't get to your doorstep. And I can see a very useful capability of a digital currency in this particularly challenging times. You had your electronic wallet be an informal worker, a formal worker. You just hit it through there. And I think countries in emerging markets would be much, much better off if they already had their own cryptocurrency. I'm not sure that, when you look at Venezuela, China, or some other countries that are thinking about this is what they're thinking about. But I do see some benefits in thinking along those lines.
There's another question here, and this one was about inflation. Actually, we didn't actually talk much about inflation. What's your view on the inflation path, like kind of globally, you could say deflation, inflation, or stagflation?
I think it's deflation plus inflation. I think it's quite obvious that the inertia right now, in many regards, and particularly when I look at the credit market, we are being very successful in sorting out the liquidity issues. I'm not so sure that they will be able to sort every single solvency or credit issue. So I think there's a deflation trend that will stay with us for a while after the lockdowns are over. Consumers are going to be much more careful, and investors, entrepreneurs, and so forth. So I think there's a deflation trend over the next 12 months. But I think that once that trend subsides, we'll move probably quite quickly into an inflation trend. And I think it is very likely that central banks will let that trend go for a while, under the argument that, this is not modern monetary theory, but it's got some flavor to it, but the argument would be, okay, we've missed the target for so many years with an under target. We can afford to average out through the next cycle and have higher inflation rates. That would be the monetary argument to it. But I think a more important one is the fiscal argument. I think we're moving into a world of fiscally dominated central banks. The only way you can expect public debt in the developed world to be sustainable in the long run is through inflation. We've seen that again and again. You look at a long series of public debt in the US. I know over the last few days there was this talk about a Hamiltonian moment in Europe, when Hamilton took the debt from every single state and made it federal. And that was the beginning of US federal debt. Back then, it was like 30% of GDP. It came down to zero right before the secession war in the 1860s. During that war, it went up again to around 30. It fell off, increased again to 30% or thereabouts in the First World War. It shot up much, much more than that in the Second World War. And every now and then, the only way debt came back to some normalcy was through inflation. I don't think the market is prepared for this. And I think most of what the governments are doing right now is basically issuing debt at negative or zero rates for rather long tenors. So I don't see how they will resist the temptation to deal with it via inflation, as it's happened before in the US and other countries in the developed world, and as it's happened again and again in our countries.
Well, what do you make of the Japan case? Because Japan's always the one exception to this, huge debt levels, yet it's had anemic inflation for decades.
There are always two exceptions, Japan and Argentina. But Japan is a very interesting exception in this regard. I think there's a lot of demographics that goes into it, but I'm not going to pretend that I can find the holy grail of the Japanese policy endgame. I think I've been one of those guys who've burnt his fingers shorting JGB for a while. We've all been expecting inflation and eventually rates to come up in Japan. I think it's a lot more complicated than that. But I also believe that if there is a last straw over that massively boarded camel's back, it will be huge, because essentially we've gotten to a point where BOJ not only owns most of the JGB market, but even the equity market. So my sense is that the fact that it was able to keep going like this for longer than what many people expected does not necessarily mean that it will stay like that forever.
So what do you think about Argentina's default path? Or how do you think about Argentina's restructuring?
A default accident could be actually worse, but I think it would be worse for creditors and bondholders than it would for the sovereign, for a very simple reason. Last time we had a massive fight in the courts, this was basically from 2001 to 2015. And I know this very well because I was in charge of sorting this out and getting out of default back then. we had a sentence from the judicial system in New York, a firm sentence that forced Argentina to pay. We went there, we had a negotiation, and to make a long story short, we ended up with a deal that basically meant that for most creditors who had litigated and actually won the claim, they ended up cashing in the equivalent to the initial capital, the face value, plus the accrued interest on a similar US note. Argentina, literally, what we offered to pay after negotiation was equal to the accrued interest of a 10-year US Treasury from 2002 all the way to 2015. My point here, if you're a bondholder thinking about whether going along with Argentina's proposal or not, I mean, of course, you've got to think about the alternative, how much the alternative is worth. And we've got jurisprudence here. And the alternative is, according to that particular last experiences, the best you can hope for is face value plus US rates over the time horizon under which you litigate in the New York courts. I don't know if that's going to be 5 years, 6 years, or whatever. But you look at the futures market, and that rate is not going anywhere. So if Argentina is offering you face value plus 3%, I think you should take that offer. I mean, and no matter if it's not enticing enough, you should take that offer. And also you should get some P&L in your portfolio because your position is priced at a much lower level. So, but we'll see what happens. It's very frustrating that every now and then we get back to the same starting point, and it's very frustrating, particularly for me, because some of the bonds that are being negotiated around right now were the bonds that we issued at the beginning of my tenure at the Ministry of Finance, which were in turn the bonds that secured the funds to pay down the litigation from the previous default. So very sad when you think about it.
Now, final question. I mean, this is from me. Here in the UK, we've had the whole Brexit sort of issue, now COVID and so on. And I know that you've had some interactions with policy on this side. I understand you were interviewing for the role of Bank of England governor at one point. Is that right?
That's right. I mean, I haven't made this public really for a number of reasons, but yeah, I was approached by the first stage of the process when they were looking for international candidates. And then along the way, they changed tracks. And from a political point of view, they realized that in the midst of Brexit, bringing a foreigner, wherever
Argentine
that foreigner
as well.
came, Argentine, would have been even more difficult to explain. But I thought that was an interesting experience because in a way, the political system, or at least the Treasury, let's put it that way. I mean, the staff at the Treasury was looking through Brexit as a potential traditional emerging market moment, if you will. So the fact that they were looking at people like me, I think that was a good surprise to me, because I think they were getting prepared for the unexpected. They got the unexpected, of course, the unexpected. And I think they could use some help, at least in the board, with some minds that have gone through a massive crisis in the past, because I think the payment system, the credit issues, even liquidity issues are things that can turn around very uglily against you. So yeah, I think on the question of how they're dealing with it, I haven't actually followed much of the governor in his speeches and so forth. I'm, of course, a very good friend of his predecessor and a good admirer of Mark. I mean, what I learned from my previous experience, we were getting close to that at one point in this interview, Bilal, is that it's in times of crisis, it is very important what you do and how you do it, but it's probably more important how you communicate it. And I think in that regard, my sense is that probably a little bit of an underperformance compared to other colleagues in the central bank world. But yeah, I think the response from the fiscal arena and also from the Bank of England has been very, very strong. I just hope that they can push this crazy June 30th deadline one way or another, and we don't add yet another source of instability to the kettle, because I think it's been already quite harsh on the UK as it is.
Okay, well, I think we've covered a huge amount of ground on the podcast. So I just like to thank you very much for coming on the podcast show.
Thank you, Bilal. It's been a pleasure, and I hope we can repeat this, say, like 3 or 4 months down the road, and realize how wrong we were.
Okay, no, great. Thanks a lot, Alfonso. Thanks for listening to this episode. Please subscribe to the podcast show on Apple, Spotify, or wherever you listen to podcasts. Leave a rating and let other people know about the show. Also, sign up to become a subscriber to our research at macrohive.com. We'll be back soon, so tune in then.